We've all heard the saying, trends are your friend until they're not. Problem is, most of us cannot even identify when a trend has formed or is in the midst of being formed. In this video, I'm going to show you exactly how to identify a trend when it's premature and when it's already matured, but also I'm going to show you exactly how to trade it and how I personally have traded it over the last several years. Following trends and knowing the longer term horizons of where an asset is going will allow you to get an amazing edge over the markets and position yourself exactly how you need to be positioned in order to make profits. Welcome to the channel. My name is Matt Jimenez, and if you don't know who I am, I'm just an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything they poured into me. Without further ado, let's get right to it. Trends are just a series of correction movements followed right after an impulsive movement. So if it's an uptrend, you will have an impulsive movement to the upside, followed by a correctional movement to the downside, because the correction is always trying to bring it back to a means of normality. It's very important when a trend is being formed and how to identify it so you can be on the right side of the trend. You never want to be going short in an uptrend, and you never want to be going long in a downtrend, because the odds are you will be getting smoked. What you want to do is go with the trend. If it's an uptrend, you want a long position. If it's a downtrend, you want a short position. But that's not to say in an uptrend you can't find shorts, because you definitely can. The correction movements are where the shorts happen. And then on the flip side of that, in a downtrend, you definitely could find long positions on the correction, because a correction in a downtrend is to the upside. The impulsive movements are to the down. But like I said, when you're trading against the trend, you want to be in and out. You want to be short and sweet. You mainly want to go alongside the trend, never against it. But it's pretty unique when you learn how to identify trends and how they move. You'll be able to find a position on an uptrend for a long, and you could also hedge your bets on the corrections. So you can have a long position and a short position at the same time. Now that's a very advanced strategy. In this video, I'm just going to stick to the basics on how to find the trend, how to trade it, and how I trade it. Now that you got all that, let's go to the charts. So we'll be going over some Forex pairs here. I have the Euro USD pulled up here, and I'm just going to show you simply how to plot a trend line. So what you want to do is go over to the top left corner right here, grab this, literally says trend line on it, so you can't get confused. And once you see a gigantic impulsive or correction movement, that's a sign to pay attention to where the next swing low or swing high is going to be. In this case, this was a swing low. Once I identified this movement to the downside, I am now watching how far we can go to the upside, and clearly we could not make it past this previous high. So that just means that there's not enough buying pressure, basically in telling that sellers are having control of the market at this current moment. And then we had another swing low followed by an attempt to swing high, and again we couldn't beat the last previous high. So now we have a clear downtrend formed. So what you want to do is go ahead and plot it, and you just want to put it along top the swing highs here, because really a downtrend is just a formation of lower highs followed by lower lows, meaning the overall chart is going to the downside. Each high is lower than the previous one, and each low is lower than the previous one. It's pretty self-explanatory. Everything just is going to the downside as a downtrend. And here you can see each time it swings up and each touch there is, those are our opportunities to find our entry to go short, because remember, the trend is your friend. In this situation, you want to be a seller. Now, typically with plotting trend lines, I always like to start from the monthly so I can see what the consensus is on the chart. So on this monthly chart, this is plotting all the way back from 2009 to current day, which in current day, the trend is down, meaning the US dollar is far stronger than the euro at this current moment. If we zoom out a bit, as such, you can see that the overall trend is actually up. So in the long term, since 1971, the euro has been much stronger than the dollar. And if I was to go ahead and grab my trend line again and plot it from this low and connect it to the next, followed by the next, let me go ahead and delete this really quick. You'll see that the trend has been clearly up. We are in a very interesting period right now because Just like support and resistance, when a trend is broken, it often becomes its opposite. So if an uptrend is broken, in this case, the trend line will act as a form of resistance. As you can see, we just previously broke this uptrend, and now we came up and we are retesting it with a nice bearish wick right here. If you've seen the last video, I go over that candle formation and I break it down to a T on how I utilize it in my strategy. If you haven't checked it out, go ahead and click the link that pops up and it'll route you to my last video where I spoke on this. Now, one thing to always keep in mind when it comes to trends, just like support and resistance, it's a buffer, never an exact line. So think of the line as a rectangle. Always, you want room for error. It's never going to be an exact line touch to the number you have plotted, but if you have a rectangle, it'll give it buffer space. So when you see a trend line, I want you to think of a slanted rectangle as you would for support and resistance lines. Now let's just go ahead and go through a couple of the charts and plot a few and show you guys how exactly I would play trends. One more thing I want to show you before I go over there is I put this trend line back. Let me remove this one, grab my trend line again, go from the highs, put it down. One thing you want to know is this is what I'm talking about. You see this error? This is not touching the line. So people can get confused like, well, it didn't touch my line. That's why I want you to see these things as rectangles, because that buffer of a rectangle gives it a lot more space for you to find your position. Now, the best way that I would play a downtrend is when we pull back to the trend line, I'm looking for candle formations at the trend line, whether it be on the same time frame or in lower time frames. Typically, I would drop down to lower time frames. I'd plot it on a monthly, and as we approach the trend line on an hour or a 30-minute, I would look for a candle formation or some type of confluence to let me know this is the exact time to enter. In this case, I just want to show you something really quick. I zoom in a tad. Right here is the candle formation that I talked about in the last video again. And this would be an awesome shorting opportunity because we are at the trend line where we would like to find a short position. So that was a very valid setup for us. And is there any more? No, not that I see besides this one. And this one, it played out about halfway in profit. Right now, if you took this trade, you'd be at like a break even roughly. All right, let's go down the list, guys. Next in order is the dollar against the yen. All right, this is very interesting. As you can see, the overall trend of this has been down, correct? We could all see this. It's very clear that whole movement has been to the downside. But what's been interesting is this high back in 98 is now being tested once again in current day. And what I call this here, this is a consolidation. When a market is just range bound between a high and a low, in this case, it's this high and these lows. And we've just been trading inside of this very tight range. One thing I'd like to keep in mind is even though you could be in a range, you can still find trends within it. Trends move in many different ways. It doesn't have to be just one direction. Obviously, there will be a trend from the high down to the bottom of the range. And then there will be a trend from the bottom of the range down to the up of the range. Trends are very versatile and can be used in many multitudes of situations. All right, let's move on to the next chart. So here we have Great British Pound against the dollar. Let's start from a monthly and drop down. I really want to find an ideal situation to where it would be exactly how I would play it in real life. So here you could see there's a clear downtrend. Go ahead and grab the trend line, go from this wick of the candle down to these lows. This is the second attempt to make a high and it failed. So now we have a higher low. And then here's the third, we have a higher low. So as you can see, we are trending downward. And in fact, this exact setup here was remotely decent. If you took it, you would have seen profits for, remember this is a monthly, so you would have seen a little bit of profits for about 2 months. And now you're probably at a break even. Now let's go ahead and drop down to a daily, or let's start at the weekly. So at the weekly, we did have a nice candle set up here, which was a pretty decent short. So that's how it would play out. You would find the trend on the monthly, and you drop down onto smaller time frames as we approach that trend line. Now we're down onto the daily. As we approach this area, I will go ahead and look for shorting opportunities. All right, let's move on to the next chart. Also, when it comes to really nice structured trends, for examples, the smaller time frames tend to have really clean trends that we can look at. So here we have Aussie dollar against the US dollar. I'm going to go ahead and plot my trend line. Remember guys, it's a rectangle, not an exact price point, or rather an exact line, as you can see. So this would be impulsive correction, impulsive correction, impulsive correction, impulsive correction, and so forth. Now let's go ahead and drop down to see if there's any setups for us. Check out the 4 hour, nothing there. All right, so there's no setups. All right, so I just scrolled through the 4 hour, and to save you guys time, I didn't see any setups happen on the trend line. Before I'll go on to the next chart, let's just go ahead and check out a monthly time frame. Oh wow, so even if we drew this trend line all the way back, we're still following that trend line that has started all the way back in 2011. This would have been an amazing setup for us. It happened in 21. That candlestick, again, if you haven't watched the video, go ahead and watch it because it is such a profitable strategy. And let's go on to the last pair that I have up for us. This is the monthly of the US dollar against the Canadian dollar, and this is a very unique one. As you can see, we have pretty much just a range-bound market. We have trends that happen within it, but for the most part, it has not been a very quality trend to be following. Whether you were long or short, you were pretty much at break even or in profits and fighting in between that. I draw this trend line. With uptrends, you always want price obviously to be above the line, and with downtrends, you want price to be below the lines. So here's the swing high, and then here is another perfect example of a break comes down with the retest. On the retest, we can find short positions, and then again, another retest of it, and a retest of it once again. So the retest is super effective. I'm gonna go ahead and delete that really quick. I wanna drop down to a daily, see if I could find a better setup for you guys to look at. Okay, so I dropped down to the 4 hour to see if this structure was a pretty good example to show you, which it is actually. It's very clean. This is exactly what I was talking about when I was saying smaller time frames have much more of a pretty structure on their trends because they're so intraday that trends form and reverse pretty often versus looking at a monthly chart. The trends they take much longer to form, right? On a monthly chart, each candle is a month. So for a trend to be properly formed, it's gonna take, years. And when we're looking here at the 4 hour, this is a perfectly respected uptrend. I'm going to go ahead and grab a circle just to highlight to you guys all of the touches. So here, 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 and here. Now what's unique is the exact thing that I was talking about. Once the trend is broken, it comes up for the retest, which is happening right now as I'm covering this. And as you can see, you have a nice structure forming of a downtrend for this pair here on the 4 hour. As you can see, you have your swing low to swing high. We didn't take out the previous highs. That's our first inkling that we are headed much lower because we couldn't take out the previous high. And then again and again and so forth. And then we broke. But also another red flag to show that this uptrend is losing its steam is the MAs, the moving averages, are starting to pinch, showing signs of weakness in the uptrend. And like I said, we just broke it with a retest. What I would do in this situation is I'd actually probably look for a pullback into this region where the MAs may meet, and then also this uptrend to where I could find a candlestick formation, some type of setup to let me know I can go short here. This was a very picture perfect uptrend. I couldn't have found a better example to show you guys what an uptrend would look like. And then also, I could not have found a much cleaner break in an uptrend and with the current price action going up for a retest. So this was a perfect example. Now, the main things to take away from here is uptrends, you want price action above it. Downtrends, you want price action below it. Anytime either of these break is the moment you can look for a pullback for a retest and find an entry. But remember, you always want to be trading with the trend. So for uptrends, you want to find long positions on the bounces of the trend. It is basically the same exact method on downtrends. You want to find shorting positions on the bounces of the trend. So you want to find your candle formation. I want you guys to pull up TradingView and go ahead and pull up some of these charts and practice with the tools that they have so you could get familiar on how to draw these trend lines. And the more often you do it, the better you are at identifying these trends. Remember guys, you can trade against trend, but you must be in and out. You always want to trade on the correction of the movement. So if you're trying to short in a uptrend, you want to short on the correction. And if you're trying to long in a downtrend, you want to do it on the correction. The same exact method, just completely opposite. Take all these, apply them to the charts, and I want to know if you found any value from this video. If you're confused on any of this information that I left, if you leave a comment, I'll directly address whatever it is that you're confused about. Now, I've been in markets for many years, and over the last year, I've been utilizing software to trade for me, and it's been extremely effective. If you're interested in the software that I'm using, the link is down below. Like always, guys, thank you for watching. Leave a like, comment, and subscribe, and I'll see you on the next one. Peace.